So it's so good to have you all here. Regfyl is a RegTech platform that empowers financial institutions to automate and strengthen their anti-money laundering and countering the financing of terrorism, that's AML CFT, and customer protection frameworks, as well as fraud prevention operations. And one of the reasons that we are so keen on financial institutions is because I think when we talk about compliance, that is where the biggest issues lie. And with many of us working in banks and financial institutions, you know how expansive that atmosphere, that environment can be. And at Regfyl, one of the things that we want to do is to help you make that workflow seamless, make it easy for you to do some of the things that you have to do to actually ensure the safety of your organizations, both in preventing risk and in also staying regulatory compliant, to put it that way. So we are trusted by financial institutions in Nigeria to deliver regulatory compliance, like I mentioned, operational efficiency, and risk mitigation. And two things that we are keen on are quick deployment and minimal disruption. And for this afternoon, to get into it quickly, because we have 1 hour, 30 minutes that we're going to be talking. And in that 1 hour, 30 minutes, we are going to hear from the CEO of Regfyl about the report that we mentioned and the findings, the key findings from the report, so that you as compliance leaders can know how to better position your organizations and the risk departments or units in your organizations to better profile solutions to the organizations that you serve. And then after that, we'll have a panel discussion with our amazing speakers. One of the things that I love about this panel lineup is their length of service in the industry. Many of them, all of them are C-level professionals in the compliance industry. So they come with experience, not just title, and we are going to be hearing from their perspective, building compliance structures in banks, in financial institutions, fintechs, and all of that. I mean, we have one of them who has worked extensively at CBN. We have Access Bank as well, and we have Zone Payment Network as well. So this is going to be a packed conversation. The first speaker that I am very privileged and very honored to introduce to you is none other than Ifunanya Anamelechi. She's a seasoned legal and compliance professional with over 15 years of experience. I told you they come with expertise from lived experience, and her experience spans commercial law, corporate governance, financial crime, and regulatory compliance. She currently serves as Vice President, Legal and Compliance at Zone Payment Network. Her experience cuts across multiple African jurisdictions, operating within both common law and civil law systems, and across industries as well. So she has worked in banking, financial technology, telecommunications, construction, and oil and gas. Today, Ifunanya brings a strong track record of providing strategic legal guidance while ensuring strict adherence to complex and evolving regulatory requirements. Next, we have Ugonna Akah, and he leads compliance, AML, CFT, and enterprise-wide regulatory risk management, ensuring alignment with local and international standards. Before Moniepoint, Ugonna spent over a decade at the Central Bank of Nigeria as a bank and payment systems examiner, where he led risk-based supervision, conducted on-site and off-site AML CFT examinations, and supported compliance enforcement across regulated institutions through stakeholder engagement and, of course, policy enforcement. He has also contributed to major national initiatives, including the Payment System Vision, that's the PSV 2020, and the successor of PSV 2020, which is PSV 2025. These are initiatives, like many of us know, that modernize Nigeria's payment ecosystem. He contributed to the design of critical regulatory frameworks, including the RTG rules, mobile money guidelines, and the payment systems risk and information security management framework. And Ugonna holds degrees in economics and finance and business economics, and his work reflects a deep commitment to compliance innovation and building resilient, inclusive financial institutions. And I have Femi, who is a C-level risk and compliance executive, and he has nearly 25 years of cross-border experience in the financial services industry, including senior leadership roles at international banks in the UK. Before that, he served as Group Chief Conduct and Compliance Officer at Access Bank, where he was responsible for the adequacy and effectiveness of the bank's conduct and compliance framework across Nigeria. That includes 6 banking subsidiaries across, and also international banking subsidiaries and representatives countries in Europe, Middle East, and Asia. Prior to Access Bank, he has also held chief compliance roles at Sterling Bank and Diamond Bank, where he played a key role in strengthening compliance culture and regulatory alignment. He has a deep expertise in shaping organizational culture, designing and implementing enterprise-wide compliance frameworks, including AML, CFT, and KYC programs, and transforming complex regulatory and governance processes. Femi is currently the Chief Risk Officer at Access Bank. All right, so next I'm going to invite the founder and CEO of Regfyl to share with us the findings of the State of AML in Nigeria survey that was conducted a couple of months ago. Tunde Ibidapo-Obe, who is the CEO and co-founder of Regfyl, an AI-powered AML fraud prevention and regulatory compliance platform transforming financial crime compliance in Africa. He is qualified to practice law in Nigeria, Ontario, Canada, and as a solicitor in England and Wales, bringing a global perspective on regulatory compliance gathered over the past 16 years in multiple jurisdictions. He's also a certified anti-money laundering specialist and has worked in heavily regulated industries like banking, pharmaceutical, and government in Nigeria, the UK, and North America. With a PhD and extensive expertise in regulatory technology, he has worked closely with financial institutions, compliance professionals, and regulators to enhance AML and CFT frameworks. Under his leadership, Regfyl has pioneered innovative compliance solutions, published industry reports, and driven thought leadership in the sector. Tunde is an absolute and unapologetic advocate for practical, technology-driven compliance strategies. Please help me welcome Tunde Ibidapo-Obe as he shares the report on the state of AML in Nigeria. You have the floor now, Tunde.
Thank you so much. I just want to make one slight clarification on the introduction. I am a co-founder of Regfyl. I am not the founder. I have an amazing co-founder in Dr. Tomiwa Eriosho, who has been a very, very massive part of the growth of the company so far. And so he's somewhere in the audience there. And so thank you, everyone. I think for me, this is a very, very important event, not just because it's a culmination of the work that we've done in this report over the last 3 to 4 months, but it's also important because it comes at a very, very critical time in the AML compliance landscape in Nigeria. Firstly, I want to acknowledge the efforts of every single person in the audience today, the attendees, the panelists, because some people in larger ways, some others in smaller ways have all contributed to Nigeria getting off the grey list. It is not just the NFIU or just the CBN or just the CAC that got Nigeria off the grey list. It is the hard work of each and every one in all their different financial institutions, making sure that we were in line with all the recommendations of the FATF. So congratulations to you all. It's a win for everybody. But it's also an important thing because when I think it was at the time when he was Governor Fashola, that said the reward for good work is more work. And so that is what is before us. Because we are off the grey list, there's an expectation that we should maintain those standards. And so when we actually started working on this report, Nigeria was still on the grey list. And so a lot of the information that we got, we actually had to then take it in line in line with the new I guess the new reality. I want to thank the panelists, Mr. Jaiyeola, Mr. Akah, and Mrs. Anamelechi. I want to mention 4 things. The first thing is I want to mention, I think Regfyl has done a good job about explaining who we are at Regfyl. At a high level, we see ourselves not just as a RegTech vendor. We actually see ourselves as a compliance partner. For us, we see that one of the challenges that a lot of compliance professionals and financial institutions face is people just come, sell a solution to them. This is what it is, take it or leave it, and then they hide behind SLAs and hide behind terms and conditions. We tried as much as we can to get in the trenches with our partners, because we know that the challenges that they face are ever complex and ever increasing. So hopefully the people that are customers within the comments in the group can attest to it. And because we see ourselves as a compliance partner, we see that understanding the challenges that the industry faces is the first part to be able to support how we can solve, in our very little part, solve the problems that the industry faces. This survey highlighted a lot of challenges. Some of them it has to be the financial institution that solves it. Some of it you need support of vendors. Some of them you need the government. But what we've been able to do is been able to surface the ones that, at least from our perspective, the ones that we can have a little or a lot of influence on. And we've been able to use some of these insights to influence how we engage with our customers and our potential customers. So that is who we are and why we do what we're doing. You have to understand that one of the challenges that we have in Nigeria is the challenge of lack of data and this idea of siloed information where everybody wants to sit on their own, do their own thing, and then think that they can solve all the world's problems on their own. We are living in a largely connected environment now, and it helps when everyone is working together for the same outcome. And so that is kind of what the state of AML is. Financial institution A, financial institution B, C, D, E, F, you all have problems. What you don't understand is that all of you have the same problems. And when you come together and are able to articulate those problems together, then maybe you can find shared solutions. And so that is the why behind the State of AML Compliance in Nigeria 2026 report. It is not our first one. We did one for 2024, and we saw the value that it had, and which is why we did another in 2026, and we will do another and another because we've seen the value that it brings to the community. So to the report itself, this is a 39-page report over 8 chapters. The way that we did this, and I think is important because how you gather your information goes to the quality of the outcomes. And so one thing that was important was we were engaging with people that were verified compliance professionals. We didn't just put a link out there and just said anybody complete it. We didn't want people that don't work in compliance, people that only work in maybe accounting or maybe marketing. No, we wanted people that work in compliance. So they were vetted compliance professionals that engaged us on this. 227 of you graciously accepted to participate. I can confess that we reached out to much more than 227 people. But yeah, I get it, people that are busy. There were roughly 40 questions that we asked. As you can imagine, asking 40 questions of 227 people, the sheer amount of data that we would get is a lot, and you can't actually fit everything into a 31-page report. So there's certain things that unfortunately couldn't make it into the final report. But one thing that I promised myself and promised the team is that we will find ways to be able to still surface that information during the course of the year. So there will be other things that come out of this report, and it's not just this final report. So yeah, 227 people answered 40 questions. There's the breakdown of the people who responded. I mean, we had people from from commercial banks. We had from payment solution service providers, from IMTOs, microfinance banks, The vast majority were commercial banks, so 29.5%. That's not to say that we didn't take into consideration other people. It's just by just sheer numbers, the commercial banks just have the vast majority of compliance professionals. Experience level was also important. We didn't want to disenfranchise anybody just for the fact that they were junior, or I use the word junior in context, but early stage compliance professionals. But we know that you get more quality information from people who have been in the space for longer because they've seen trends, they've seen different regimes. And so the vast majority, so I think roughly about 50% were people who have over 5 years of experience. We had a situation where about 18% are people who have been in the industry for more than 10 years. So experience level was something that was a big factor. People with less than 2 years, only 7% of our survey respondents had less than 2 years experience. Also important was seniority distribution. It's important because when you are faced with the challenges that you have in front of you, the higher you are in the organization, the more it is your task to create solutions for those challenges. And so we had the middle management in compliance teams was the highest percentage, about 27%. We had some C-level executives, just under 11%. So it was a broad range of people that we engaged with. Not only did we just get the raw information from them, we were able to synthesize it for certain individuals that we need more nuance. We engaged with them to get the more nuance. But then we fact-checked a lot of things around the industry information from either the CBN, the Securities and Exchange Commission, the Nigerian Financial Institution units, Nigerian Financial Intelligence Units, NICOM, as the case may be, and also global organizations like the FATF. So it was a very, very well-rounded analysis that we did in the team. And so at a high level, I'll just talk about some of the things that we saw in the data. What we did is that what I try to do is that I try to see how we can draw some insights from the data that we saw. You will see the raw, the more granular breakdown of all issues around identity verification, address verification, PEP, sanctions screening, all of that you will see in the report. But what I try to do is bring out 5 key insights that we think would shape what compliance looks like going into 2026 and beyond. The first is, we tagged it the machine-assisted decade. I think that's a bit of a mouthful, but in reality, what we're seeing is a shift. People are moving from manual to a technology-driven compliance profession. Now, some of it is by choice, but the majority is not by choice. It is by necessity because the CBN released the draft baseline standards of automated AML solutions last year. It's still a draft, so it's hopefully we get some more clarity this year about when it will take effect. But the reality is that the CBN is now mandating that compliance teams in financial institutions must by default be including technology into their compliance stack. It is now going to be the reality. And so that is something that we're seeing. So manual workflows are going to be phased out. And so we're moving from a system of a lot of manual processes to a lot of technology-enabled processes, which is a good thing, and I guess a bad thing. And I guess we'll talk about the good and the bad over the next couple of minutes. The first bad, if you will, is something that we surfaced through the report, and that is there is a data crisis in a lot of financial institutions. I say crisis, and I'm not trying to make a mountain out of a molehill. It is a crisis because 45% of the people that we surveyed cited poor data quality as a core challenge that they have. They also cited about 42% cited issues with system integration, and obviously this then bleeds into other parts of the compliance processes, whether it's around address verification, identity verification, PEP checks, and the like. But at the core of it, a lot of financial institutions unfortunately have their data in disparate locations, and for time they don't have the technology wherewithal to be able to aggregate that information, or they don't just have the bandwidth. You can blame potentially a dearth of technical talent. Maybe some people have moved to the UK or Canada or the US. Maybe that's a factor. But the reality is that the technical teams that in a lot of financial institutions are struggling. And because they are struggling, it's a strain on the resources across the entire team. You have the people who are revenue generators trying to get as much time as they can get from the tech team. You have management trying to get as much time as they can get from the tech team. You have HR, and then sometimes compliance gets kind of relegated. So compliance is fighting for space to be able to put their own challenges at the forefront. So there's a data problem now, and if there's a data problem, technology works off data. So if you already have a data problem and there's a mandate to go to technology, then a lot of people are going to be caught unaware. So that's the second challenge that we were able to surface. The third is what we call a two-tier landscape. And that's because when we analyze the data from a lot of the respondents, we were seeing that a lot of people were saying, oh, we're already using technology. We have a transaction monitoring solution. Sometimes we use AI, we do X, Y, Z. And we're seeing a lot of people that were saying, actually, we're using spreadsheets. We're using macros in spreadsheets. We're using Google searches to do PEP checks and the like. And then after we drill down into the data a bit more, we were able to see that actually the people that are saying that they have all of these things are the people that are in sophisticated financial institutions, commercial banks, fast-growing fintechs that are already technology first. In some of the SEC licensed capital market operators, some of the microfinance banks, they didn't necessarily have a technology first mindset. And so what you're seeing, if we're not intentional about how that development happens, is that you're going to see a dichotomy. There's going to be the people who by default are just technology first and they're going to start growing faster. And they're going to see the people who are going to be a bit of laggards. And that's not by choice, but that's because they don't have the structure to be able to keep up. Now, the CBN's baseline standards tries to do some things to try to address that. I think the biggest thing it says is that it sets the standards for anyone that's trying to assess a technology vendor. People that have been on procurement committees when they're trying to determine who is going to be which tech solution you're going to adopt. You would see that one of the challenges that you have is trying to keep the criteria for how you assess these people. The CBN has actually made it easy for you. You can just basically have a vendor say, okay, show me how you meet all the baseline standards. I mean, we've been on calls where financial institutions have asked us that question. Thankfully, we've been able to address how we directly meet the baseline standards. But that is something that the CBN has been able to help smaller institutions with that kind of decision-making process of how they would assess a good or a bad vendor. But there's a lot that goes beyond that. And so we're at risk of having this two-tiered landscape if care is not taken. The fourth is what we're seeing as an expanding risk parameter. And why we say that is in the SEC space, we're seeing that crypto is now becoming more and more. We're seeing crypto adoption gaining momentum. Now, crypto doesn't. I mean, yeah, you can say, well, I'm not a crypto company. I'm not going to be licensed by SEC. But the reality is that crypto is basically it's introducing a new financial regime, if you will. And so someone doesn't just have crypto and have it in a silo. That crypto will by default have to interact with the financial system. And so whether you're an MFB, whether you're a commercial bank, whether you're an insurance company, whatever it is, there will be some level of interaction that you will have with cryptocurrency, either with the customers or with the actual currency. And so if you don't even have an understanding of the risk that exists in crypto and virtual assets, then you're already at a disadvantage. So a lot of people were saying that crypto doesn't concern me, but actually it does concern us all. And if you don't think that it concerns you, then you don't think of how your institution can adapt and adapt itself to be able to meet the new risks that come with the crypto space, because it's coming. The SEC has already created that framework, so it's just a matter of time. And so that is one of the risks that is on the frontier that we're seeing, that people are not. I mean, whether it's people sticking their heads in the sand and saying, "Oh, I've heard this song before," nothing ever comes out of it. Well, I don't know, but the reality is that the crypto risks are going to be coming more and more over the next several months. So that's one. The second is the convergence between fraud and AML. And it's something that is important to us at Regfyl, because one of the things that we do is we have a transaction monitoring solution that our customers use. And a lot of people have this idea, and maybe some of it is, I don't know whether it's good or bad, but some people think, oh, there's fraud solution, there's transaction monitoring solution, there's a clear dichotomy. We take a different approach, and we see that they are slightly fused, because if you don't do your AML properly, if you're not monitoring transactions properly around your AML obligations for suspicious transactions and all the like, then you might miss some of the indicators of potential fraud. And so for the people who can collect customer deposits, the CBN has hinted of something that's coming in this year, which is around the APP, authorized push payment fraud regime. And so that is going to have a massive effect, because you want to make sure that before you even let a customer within your ecosystem, you want to make sure that you're letting the right customer in, because you don't want any issues around fraud, because you know that now you might be on the hook for fraud. So that is something that is going to be a big deal in 2026, the fraud and AML convergence. And then, we're seeing a lot of people that are, a lot of companies that are growing. There are a lot of, and not just like fintechs, because fintechs, always say, oh, this fintech, they didn't exist last year. Now they have 1 million customers. Yes, there's fintech velocity growth, but for instance, in the capital market space, and I'm not an expert in capital market space. I'm not making any predictions, but as you have seen, everyone has seen, the Securities and Exchange Commission has recently increased the capital operating base for a number of their licensed entities. By design, what that would mean is that some companies are going to get stronger. Whether they're going to get stronger and bigger by getting more capital or by acquiring other companies. That is the reality of what will happen in the industry. And so you could have a situation where one compliance team, maybe they just had 100,000 customers before, and then in 6 months now they have 10 million customers, because they've been able to acquire other people and acquire other customers as well. So that velocity of growth is going to affect a lot of different industries. It's not just fintechs, it's not just commercial banks, it also may be the capital market space. And so the risks that come with that high growth, a lot of people have not actually articulated how best they can address it, especially because for a lot of people, it's not a lived experience. And so that is also why it's important to have these kinds of communities. I'm not going to name any names, but there are people here that their companies have seen for a lot of growth in their velocity. So maybe you can lean on those people for their own insights and things. So and the fifth and final thing that we're seeing is that, and it goes back to this point about community. The way that the industry progresses is if there's collaboration between organizations, collaboration between regulators. One thing that it's a hill that I'm not going to say I'm willing to die on, but it's a hill that I've planted my flag. Is I think that there should be a lot more collaboration when it comes to certain things, like for instance the thing that concerns us the most, which is the baseline standards for automated AML solutions. The CBN has set out the baseline standards for if you are supporting a CBN licensed entity. As I'm sure a lot of people in the attendees are, you might have a group structure where you have a company that is SEC licensed, and another that is CBN licensed, and maybe another that is NICOM licensed. What you don't want to do is having to pick and choose different solution vendors for all your different entities. Sometimes you want an vendor that covers your entire group structure. So it would have been good, and maybe they will at some point. It would have been great if, for instance, the SEC could key into what the CBN is doing on its baseline standards, so that there's almost like a financial system baseline on that. That's just this is my personal opinion, not a Regfyl opinion. It's my personal opinion. So, that's just an example. I know that there's a lot of initiatives that the NFI is a massive champion of these types of initiatives for collaboration. And so I know there's a number of initiatives that the NFIU either are already championing or have in the works, similar to CBN, similar to SEC. So regulatory collaboration is going to be key. Collaboration within organized financial institutions is also going to be key, but also collaboration with financial institutions and their vendors, because a vendor, a regulation, a RegTech solution doesn't just come and offer you a service. What they are trying to actually do is solve a problem that you have. And so their preoccupation is, how can I solve not just this problem, but the other problems that you have coming? And I think that's kind of, and I'm not doing any marketing here, but that's kind of the Regfyl difference, because when we work with our customers, we don't solve the problem for today, we solve the problem for tomorrow. And so for us, it's important that these things, and these are just some of the insights that we've been able to get from the entire report. You will look at the report and maybe you get your own insights as well. I will end and just say thank you so much for the opportunity to be able to present this to you. We're super excited about the growth of the AML space, AML compliance community in Nigeria, and then we want to continue to support. So if at any given point in time you want to see how we can support your organization, please reach out to me, send an email to babatunde@regfyl.com, go to www.regfyl.com. Anything, just you can find us. I'm very active on LinkedIn, so I think a lot of you I'm already connected to on LinkedIn. So yeah, thank you so much. I will cede my time now and hand over back to Buife. Thank you so much.
So good to have you all again for this conversation. So we're going to ask the questions that are related to the findings that we just saw from Tunde's presentation, and I'll quickly take it off with Mr. Femi, because one of the last things that Tunde left us with was the velocity. One of the things he talked about was this velocity, where organizations are scaling faster than their teams are able to meet up. So from a group CRO perspective, that's Mr. Femi, who is currently the Chief Risk Officer at Access Bank, would love for you to help us understand how effective AML actually looks like at scale today, beyond the policies, beyond the systems, beyond the checklists, beyond the normal, what we're used to. What does it look like from your perspective as a Chief Risk Officer at a leading bank, not just in Nigeria and beyond?
Good afternoon, everyone, and thanks for having me. I think it's a privilege to be on this call to share my thoughts around this topic, around the state of AML in Nigeria today, and what are the findings from the survey that's been done. So in my view, what does an effective AML program look like? I think for me, it's more around a program that is very proactive in nature, is data-driven, and it's also risk-based as well. So for a large bank like Access Bank and other similar banks, the need for a risk-based approach is unnegotiable, just based on the volume of data and the volume of transactions and the volume of customers you have to deal with on a day-to-day basis. And that aligns with the guidance from the Financial Action Task Force as well around the adoption of a risk-based approach. So clearly, not just within the AML space, but generally resources are limited, right? You have many things you need to deal with. So that optimization of your resources is critical. And you can only optimize your resources either in terms of the people or the systems or processes as well, if you adopt a risk-based approach to managing your AML risk. The other bit is around data as well. I think the reports pointed out some of the challenges we have in terms of data. I think it's something we struggle with in this part of the world. If we look at our national database, for instance, we have disparate databases. We have the ones by NIMSI, the one by NIPS that the bank use. You have the customs, you have the immigration, but there's a plan to pull all of this together, but it's still a challenge today. But for you to have an effective AML program, it has to be that data-led. Data has to be the foundation upon which you can then build effectiveness and efficiency. The last pillar is around proactivity, right? So you can't afford to be reactive in this space, otherwise you run into big trouble. Not just beyond the penalties from the regulators, there's a reputational damage conversation you need to avoid. And the way the banks are structured today is an interconnected economy where you have correspondent banks, you have partnership with different organizations, not just within Nigeria, but globally as well. So you can't afford to have issues around AML and things that can damage your reputation, basically. So if I go back to the original question, effective AML, in my view, it has to be risk-based to optimize resources for efficiency and effectiveness. It has to be proactive in nature, identifying things that can go wrong and it has to be risk-based as well. In terms of that proactivity, I think, in my view, compliance professionals have struggled generally. I think in some sense, we're a bit detached from the business. And for us to be proactive, we need to know what is going on within the business. What are the nature of customers that are being onboarded? Which products or services are being offered to what customers? What is the business strategy in place to expand the business? What geographies is the business looking to expand into? Those are things that, as a compliance professional, you need to take back and analyze what it means for you in terms of the AML risk these strategies or objectives are pushing towards. So at the end of the day, it's around being proactive, being risk-based, and being data-driven as well. Thank you.
Thank you so much, sir, for that insight. I'm going to come to you directly, Ifunanya, because one of the things that he mentioned is proactivity as a way of avoiding problems. You don't react, you don't wait for things to happen before you begin to respond to them, but being proactive helps. And speaking of being proactive, which AML weaknesses would you say from the legal and regulatory aspect, would you say creates the most legal or regulatory exposure in practice for institutions across the financial industry?
Thank you very much for that question. So I would say in my experience, I have experienced a couple. How many am I allowed to mention? Maybe one or two?
Maybe one or two. Yes, that's fine.
Okay, so the first one I would say is, when it comes to exposures, I would say one major issue, which I think the AML reports highlighted this, is how identifying beneficial owners has been a persistent challenge till today in fighting AML. So you see that at the point of onboarding, which is the first stage where you must get it right, otherwise the other processes become unreliable. At the point of onboarding, when you're trying to unveil beneficial owners, you see entities owning entities, entities owning entities, and it just keeps layering on. You even get to a point where you see maybe 3 individuals and 1 entity, the entity owning 50%. You try to unveil that entity, you now start to see entities outside Nigeria. And it just keeps going on. And at the point where you are still trying to unveil, maybe this client happens to be a very key client that is very beneficial to the business, and they're telling you, we can't keep holding on. Okay, give us a deferral while we continue. Give us. And then the process of trying to do this, regulators come to audit you. So where you have your exposure are usually around those matters that regulators can easily identify once they are examining you. And if a client is being called up and they say, okay, let us have the KYC on this client, and they see that you have not been able to unveil this client, however, this client is fully onboarded, is transacting, or whatever it is, has advanced, like whatever business transaction you have with this client has far advanced, automatically as a financial institution, you are exposed. Another one I would mention is, I like what Mr. Femi said, that you have to be data driven. Now, this data that we talk about, we know, and as the AML report rightly pointed out, you see that it is largely fragmented. Sometimes the platform, the solution, well, I believe that this new CBN exposure draft on baseline would address that. But before now, you see that sometimes the solution that you use to onboard and verify NIN and BVN might be different from the solution that is monitoring your fraud real time, or might be different from the solution that is monitoring your transactions. And when all of this data, they are fragmented, they are not put together, and then something happens, you might not easily link this fraud incident to this particular customer that failed liveliness check at some point during onboarding. You might not easily link this customer to somebody who, and then maybe when regulators come and at the point of assessment, they see that, but this same customer that committed this fraud was this same customer that you could not properly onboard. Who approved for this customer to be onboarded? You do not have clear audit trails to even show how was he able to transact even after you had this issue on ground. So you just see that most times institutions are exposed to things that can easily be spotted by examinations and audits when the regulators come. So it's always best to just comply rightly and have a very best workflow where data is operating, everything is together in one solution. So from the point of onboarding, you get your onboarding right, unveil your beneficial owners to the very last individual, the very last natural person, because that's where we always have that challenge. Companies. And then that same data that you use to onboard flows into profiling the customer, flows into monitoring the customer's transactions, flows into investigating whatever comes up as the case may be, and then reporting appropriately when the need arises. With that, you would avoid unnecessary exposures as a financial institution. Thank you.
I actually want to go to Ugonna to speak more on, because you mentioned onboarding and getting onboarding right is the first point in all of this. So for Ugonna, I would like to ask you, of onboarding, transaction monitoring, and reporting, which of them is the hardest to keep both effective and proportionate, and why? Like Ifunanya has mentioned the difficulties in getting to the UBO of a customer, a company customer, but what makes it so hard and why?
To answer your question, yes. You sort of try to lead my answer by focusing on onboarding, but I think differently. And here's why, to be honest. I think with onboarding, before the fintechs came into place, was very manual, and why the fintechs were able to sort of push innovation was around onboarding. So that's why you see APIs directly to the issuing authorities. So for example, you have an API directly to NIPS, validate the BVN, you have one to NIMC to validate the NIN, and to CAC now. So when it comes to even business registration, before it could take weeks and months, now it takes days. That's all through innovation around onboarding. So for me, even though there are challenges, we're able to innovate around those things. UBOs or CAC, you can, again, it's not perfect, like Ifunanya had said, but there are other areas that I think are more challenging. With regard to reporting, you're talking about CTR, STR, SCRs, right? We're able to, I think my team in the at Moniepoint, we're able to do something called a bulk upload. So as opposed to trying to report and organize reporting individually, we're able to push upload at once, end of day, to the NFIU. That drastically improved our reporting numbers. As anybody here understands and knows, the NFIU sort of has a ratio of how much STRs you should file in line with your amount of transaction. It's part of the gray list sort of things that were picked out that institutions were under reporting transactions, right? So they felt as if financial institutions were sort of harboring or enabling things. So it's important that we had to find a solution to ensure that was done. Again, so that's why I don't think that's a problem. Where I think the problem is around transaction monitoring. A lot of, well, I won't say problem, a challenge, right? The more challenging part of it. And that's because everyone talks about rules. Everyone talks about having a robust system. No one talks about when you have those rules, how do you treat them? That process is still manual. I can have a very, very strict onboarding rules that flags every single transaction that I just think might be suspicious. And that would mean that I'll need an army of people to manually review those solutions. So that leads to a sort of balance between false positive and noise and alert fatigue for the people handling those reviews. There's also the issue around sort of, how do I put it now? So segments of businesses. So as my previous speaker said, KYC is pretty much the start of any business relationship. the first part you can even stop fraud is from the biggest thing you can do is doing onboarding and ensuring that you know what the customer is. So how well you onboard depends also what signal, how well you know the customer and what limits to put on customer X, Y, and Z. However, what happens is that you can have a customer that sort of has different products with you. So it can be an individual customer, like you can be a customer, you can have your hair braiding business, right? And then you can also take a loan. And so you can now have fragmented sort of information that is not synchronized into a data point for us to have enough rules to sort of flag or better understand you. So there are different dynamics around transaction monitoring that sort of creates noise and sort of makes it a challenge that has still manual interventions. And I know Tony is here on the call. He'll probably think of a way to automate that and get us to a place where we can improve on that aspect. But that's where it's still very much manual. Thank you.
Thank you so much for that. And thank you, because I see a lot of people in the comments are resonating with that explanation around this transaction monitoring challenge. And it's so good to know that was spoken on. And just because of our time, I'll quickly go back to you, Mr. Femi. You mentioned 3 things when you spoke earlier about proactivity, being data-driven, and optimization of resources being the 3 key things that you would say would make AML processes more effective. And I want us to go back to that question and have you speak again on how AML failures that commonly originate in large institutions, like where do they come from? Where would you say they come from of the 3 things that you have listed? Would you say, like in terms of optimizing resources, would you say weak systems, weak data, or weak decision making? And then which is hardest to fix?
For me, I think it's around data quality, right? So from a system perspective, the system will only work based on, there's when we're growing up, they say garbage in, garbage out, right? So if you have the best of systems, you feed in poor quality data, the output will always be poor quality, right? So you can get the best of solutions. And if the data that is a foundation that the system is running on is not good in terms of the quality and the structure of the data itself, then the system will not do what is meant to deliver for you. And I've actually worked in a number of banks, both locally and internationally as well, where we've used all sorts of systems, different systems, right? And with different outcomes, right? So very good systems have worked in other parts of the world. You have banks that implement those same systems, but then in terms of the quality of the output is always a challenge. And it comes back to the data. And when you look at data, right, it starts from the onset of the data capture itself, right? A lot of the banks today have data that were captured how many years ago? Maybe 40, 30, 50 years, especially for the bigger banks, right? At that time, those data was being captured. There was no foresight or understanding or knowledge that that data that was being captured would then be the foundation on which other things in the bank will run on further down the line, decades down the line, right? So we have people filling forms. Forms were incorrectly filled. That's one issue. The capturing of the data in the system was poorly done. Quality control, data validation was missing. So those legacy data issues have always existed. What has then happened is that you then carry this poor data quality into 21st century solutions that are primarily built on data. It's not going to work. So for me, data has always been a challenge. And it's not about the data itself, but also the structure of the data. So when the data was being captured in the systems, were they structured in a format that allows this 21st century system of platforms to run on those data? It wasn't done that way, right? So once the data is wrong, the system runs on quality data. Ultimately, the decision making itself is faulty because it's based on wrong output from the system. which is then based on wrong data that has been fed into those systems. And it's a real challenge because we have banks today that have millions of customers, right? They have data quality issues. So what then do you do? How many customers do you want to go back? And I've seen practical instances where you're calling customers and look, we're doing a KYC remediation, we're trying to review the quality of the data, I want to capture your data properly. Can you give us updated information about yourself? And I've had instances where customers will tell you straight away, look, guys, I gave you guys the same information years back, so why are you disturbing me? And they have a right to say that because they give you the same data. Well, you did, at the time you captured the data, maybe you didn't even store it properly. The data has been lost. It was captured manually in forms and account opening forms that you can't even retrieve. Or it's been in branches that has been flooded, or fire has gutted those branches, the forms are gone. So where do you start from? So it's a real problem. I know there was some comment around CBN baseline solutions. My view is, I think it's a bit too prescriptive. I don't think CBN should be very prescriptive around what kind of solutions. They can have a policy requirement in terms of what they expect banks to deliver in terms of outcomes. What they need to do, I think, should be the bank's prerogative based on their size and the nature of their business, because it can't be a one-size-fits-all for every bank. But even with the baseline solutions and what CBN is putting in place, if you don't get the fundamental issue around data quality right, it will come to naught. So those solutions, you can always buy the solutions. Banks are ready to invest in those solutions. Banks have spent millions of dollars to buy top-end solutions that worked in other banks like Citibank, Stanchart, JB Morgan, but they don't seem to work in this part of the world. And it all comes back to the data quality itself and also the structure, how the data has been structured in our system. Then we also have structural issues as well. So today, I saw the survey report that talks about the challenges with regards to address verification, right? In other parts of the world, just have a postcode or a postal code and can track an address. Very straightforward. But today, you go to a street, you can have two different number 7s on the same street. Do you understand? So where do you go from there? So there's a lot of challenges we have to do with in terms of data. Then the cultural issue around people giving out data. We are very skeptical because we don't trust some organizations to actually protect our data. And people are becoming more aware around what are you doing with my data. So if I call a customer today, I'm trying to update my system or my records, I need your updated data. Some of them are skeptical. They're always calling me, oh, my sure it's not a fraudster that wants to get my data and then use it for fraudulent purposes. So it's a real challenge around trying to solve the data issues that have been there for decades, that we're then using that base to then feed into 21st century solutions to then deliver expectations from regulators and other stakeholders. It's a big problem. So for me, it's around the data and how banks and other financial institutions can get to a point where they can go back, solve the legacy data issues, and also put a process in place that ensures that going forward, we capture the data in the right format, in the right system, and in a structure that allows future solutions to run on them efficiently.
Thank you so much, Mr. Femi, for that. And I want to come back to you, Ifunanya, from the legal point of view. Mr. Sinda, I'm also going to be coming back to you because we are hearing a lot of things about data, and I also want to hear your thoughts on how Regfyl has been able to help your current organizations that you work with, how you've been able to help them to solve some of the data issues that exist in their organizations. For Ifunanya, I'm curious with the issue on data, and I see a lot of people also responding to that in the comments about data. You work with a lot of financial institutions at your current place of work, which is Zone Payments Network. And I would like you to help us shed more light on some of the risks, AML risks that organizations often underestimate when building or scaling their payment infrastructure. Especially having the background that we have a lot of financial institutions represented here. What are the AML risks that they often underestimate? Maybe one key one, so that our audience can go back and take a look at what they are doing and see how they can improve on that area.
Thank you very much, Boife. So like I said earlier, it all starts with onboarding. Everything starts at the point of onboarding. And you'd see some financial institutions not prioritizing the importance to have a robust solution that takes care of onboarding to the letter. So when I say to the letter, I mean, as you're onboarding a customer, know that the BVN and the NIN provided is also verified alongside the liveness check. Because we've seen cases of identity theft where someone uses another person's data to create an account, commit fraud, and then the police is arresting somebody. And then the person is like, I don't even have an account with this bank. I don't know what you're talking about. So at the point of onboarding, if you're able to verify that the customer is who they say they are, especially in this digital era where people don't come into the bank, you should be able to capture data that is correct and accurate. And from that point, screen the customer accurately. That way you are safeguarding the ecosystem to even verify the kind of persons you're bringing in to transact. So I think that just overlook the risks that happen is even where it is most needed, where it is very important to pay close attention to who you are onboarding and the kind of persons that are joining your platform to transact. Should I give another one? Do I give another one or do I go on? I am seeing that I might be conscious of time, but I'll give another one. Another risk that people often overlook, I think, would be the importance of reporting within time, right? So people just have reports. Like, for instance, I think one of the panelists mentioned the issue with a lot of false positives. Within those false positives, you do not know the data that you require, like for instance, an actual suspicious transaction that should be reported would most times drown in the midst of these false positives. So much so that by the time people are just marking it as maybe this is really not an issue, you mistakenly mark an issue that should actually be investigated and reported as a non-issue. So that's another place that people would often overlook and not realize that if anything results as from that particular transaction and NFIU flags that you did not report this at the time you were supposed to report it, it becomes an issue. So I think not reporting transactions that are often drowned in the midst of false positives is another weakness that people don't realize how important it is. I personally have experienced it someplace, and at that point, it was like a wake-up call that you need to check these things one after the other. I understand how complex it can be sometimes, that organizations may not see it feasible. How many transactions are these systems flagging? How many? Just batch all of them together and just mark them as resolved or just overlook them. But it's important to build or have a system where you are able to review one after the other to identify cases that need to be investigated and reported accordingly, and cases that you can mark as, okay, this is actually just a false positive and there are no issues there.
Thank you so much for those two. So I come to you, Mr. Tunde. I'm coming to you, Mr. Ugonna. But first of all, Mr. Tunde, your work at Regfyl is to help organizations solve some of these issues, and data keeps coming up. And I would like to know if you've had any experience where you helped an organization to get their legacy data, for instance, sorted and aligned with the current issues, with the current trends and all of that. Could you share?
Yeah, thanks so much, Boife. The short answer is, as a solution provider, our primary remit is AML fraud prevention, we don't by default try to resolve legacy data problems. I think one of Mr. Femi was spot on, and all the other panels have been spot on around what the challenge is. You can't build, if you have a bad foundation, you can't build a good house. If the data is bad, you're just setting yourself up for failure. Now, the good thing, the good thing for others, maybe not so for the legacy banks who have this historical problem. The good thing for others is on this call, you're hearing how the people that are feeling the challenges are making sure that you know that data is the most important thing. So if you are just early, maybe you work for a company that is less than 5 years old, less than 1 year old, you can already start to build your systems in such a way that data quality, data accuracy is something that you embed at the beginning, because you don't want to have a legacy problem. So I think that's a good thing that is coming out of this. Now, to your question, how have we helped our customers? Like I said, we can't go in and fix a legacy data problem. What we can do, however, is we can sit side by side with you and advise you on how, within the structure of what you have, you can at least create something that is that attempts to meet the regulatory obligations. Because at the core of it, there are many problems that you have. The biggest and most hair on fire problem is your regulatory obligations. Then you have your next around fraud prevention and preventing your ecosystem. And then the third one is maybe now effectiveness and making sure your processes are running smoothly. So in that order of preference. So what we can do is we can help you to see how with the dirty data or the not so comprehensive data that you have, how we can sit within our systems and try to support you within that structure. We've done it for many customers. And so that's why we say we're a partner, not just a vendor, because the vendor will say, well, sorry, I can't help. You don't have the data. Nothing can help. But we say, okay, how can we be creative? I don't want to, obviously there's confidentiality with certain customers that we have, but there are certain situations where maybe, for instance, with CTR reporting, there's certain types of data that is required by the NFIU for you to provide in order to get it. And so maybe in historical CTRs, maybe a customer comes to us and said, oh, we haven't filed CTRs for the last 3 years. Now we want to file old CTRs. How can we do it? But we say, okay, well, it doesn't meet, the schema says you have to have X, Y, Z. It doesn't meet that requirements. So then we sit down with them and see, okay, where else can this data live? Is there a way that we can have almost like a staging area where data can then feed into the data that you want to report, and then we can try and pull in other data that can supplement that report to make it fit for purpose for the NFIU reporting. My co-founder, Tomiwa, has been very, very helpful and instrumental with working with our partners to see how we can support them in that regard. So as much as we can within our power, we sit down and help you, but we won't, unfortunately, we don't have the mandate to be able to go and try and fix historical legacy data, but we will help you and try to see how we can support you in resolving it.
Thank you so much. Thank you so much for that. And our very last question before we start taking the Q&As, we'll be going to Ugonna. And I would like for you to help us, because we've talked a lot about the challenges and what keeps coming up. And I would just like to ask you to share with us, if you could redesign one AML control today to better handle fintech volumes in 2026, what would you change and why would you change that thing?
So with regard to the AML controls we currently have, one of the things we've all said is around KYC and onboarding challenges that we have. A lot of the screening, so a customer comes in, I don't want to overflog UBO and this sort of KYC. When you read the reports, you see that we have challenges around other verification, right? Mr. Femi spoke about it. It's what you have to also do is to also understand the customer and his transactions. The CBN regulations, AML Safety Policy 2022 says that all high-risk customers, you have to perform EDD on them, right? So that means you have to have a risk scoring rating on each customer. And your risk today can change tomorrow, depending on your product, your channel, your activity that you do. In fact, so it means that you have to have a dynamic scoring system that is done daily, so that I'm sure that a low-risk customer yesterday is a high risk today, and I'm making sure that I have the EDD done on them in a timely fashion. So that requires sort of an AI-driven approach. It's no more rule-based. So adapting AI technologies in that fashion to really look at different data points, different database. Like I said before, you would have, anybody who's in the space will know that you have different sort of databases with product engineers, building different things that you offer to your customers. So being able to connect those dots and have a adequate, reliable risk rating for the customer is a big control, is a big improvement that I think is the next phase for innovation in this space. And also being able to, like I said, we have a couple of in AML CIC. So even if an alert is brought up, you can easily close it out. If it's like a transfer monitoring fraud case, you can easily close it out. But with AML, it's more involved. It takes a longer time to investigate an AML CFT-like transaction, right? You have to know whether it's used for fraud, corruption, whether it's used for money laundering through real estate, kidnapping for terrorism financing, so on and so on. Or it's been, I think someone mentioned about using 3 million, just on a reporting cycle in different, tranches. That requires longer or deeper investigation before you then file. So having to also understand the typical customer patterns and detect and review it on time is a place that I'm looking to also innovate and improve on in the future. Also around screening, right? You have the PEP screening, you have sanction screening, and you have also what I call like a reserved name screening. What happens, and also adverse media screening. So being able to innovate around this sort of manual processes, looking through false reports, or maybe, anyone who don't like media screening or even like a PEP screening, for example, in the north, names are very similar. So if you're strong in the north, for example, you have a lot of flags with similar names on either a PEP list or a sanctions list. Being able to filter through, being able to log in or even integrate with real data sources. A lot of the PEP lists, to use any free model, you're deceiving yourself. A lot of them pay subscriptions and then they don't come cheap, right? So being able to rely on relevant data to know when somebody buys a form to run for office, you have to integrate with INEC, you have to look at government committee. So being able to have a reliable data points for your PEP, sanctions, and also adverse media screening is also very important. So I think those are the sort of controls that I would sort of, in the future, looking forward to innovate and improve on.
I just want to thank the panelists once again for honoring us to be here to share their thoughts, their insightful thoughts. I think insightful is the word of the day. So thank you all for joining us. Thank you to all the attendees for taking your time. I think it's not easy to give away 2 hours on a weekday to join us. So thank you so much for that. We will be sharing the reports, but not only just the specific reports. We're going to be sharing other insights that we've been able to take from this survey. We're going to be engaging with our community both on LinkedIn and also in person via email. So please watch out for a lot of things that we have in store for the compliance community in 2026. And finally, if you have a present compliance challenge where you need a technology provider, please reach out to us at Regfyl. If you don't have a present challenge but you want to know what we can do when you will have a challenge in future, please reach out to Regfyl. We are always open and willing to come and try and see how we can support you. We want to be partners to more of you guys. So thank you so much. And yeah, we really enjoyed this session on our side.